Hey everyone, happy Thursday, March 14th. It's about 11:20 on the West Coast and time for another market updates. Weather's heating up outside, which is always appreciated, but inflation seems to be heating up as well, which is not appreciated, especially in my industry. So let's get right into it. Going back to last Friday, we got the big February BLS jobs report. Keep in mind the BLS jobs report is very important because the Fed has two mandates. They have to keep inflation under control and they have to keep unemployment low. So those are the two things that the Congress mandates the Federal Reserve to do. So that's why we have to take a really close look at the inflation reports and the job reports to get any sort of idea when we might see that first rate cut. So again, a February BLS jobs report on Friday came in at 275,000 jobs created. Only 200K were expected, but unemployment ticked up a couple. So let's take a closer look at this stuff. So keep in mind, there's two different surveys they do. They do the business establishment survey, which is a lot of math in estimates and things like that. So like I said, that was supposed to be about 200,000, came in at 275,000. Non-seasonally adjusted, they said there was 1.141 million jobs created, which is interesting. 2 month, however, they did. Again, this is not going to be surprising to people who watch these a lot. They did two big revisions, negative revisions. This has been a trend all year long. The report comes out originally higher than expected, and then over the next couple months they revise it lower, and we don't get that that positive bump in the markets that like we got the negative. So in this situation, they 167,000 in negative revisions. Last month's big January report that did not help us at all in mortgage rates. Was negatively revised by 124,000 jobs, which is a big number. And then December negatively revised by 43,000. And I believe in January, I think they positively revised December. So it really makes it hard to trust these numbers when they, it's that much differences and that many revisions after they come out with the original number. And then the birth death model, where they're trying to basically, estimate how many new jobs are created when small to medium sized businesses are created versus how many go out of business and, in jobs created. That came in at 151,000. But keep in mind the ADP, which we got last week, and is actually looking at payrolls. They only show 13,000 new jobs from small businesses. So big disconnect there. And again, the ADP is real numbers, where this part of the BLS jobs report, this is all, them coming up, doing estimates. So it's a little bit harder to trust. Average hourly earnings were up a little bit. So that's, average weekly went up, average hourly. So that, again, that's inflationary. The more we're making each week, the more money we might have. So that was a little bit of a negative in this report. And then the next part of the BLS jobs report is the household survey. So this is where they actually call people and ask them questions. Are you working? How many hours are you working? Things like that. So this one came in at 184,000 jobs lost in the month of February, compared to 1.14 million or whatever non-seasonally adjusted on the other one. Big difference there. The total labor force actually was increased by 150,000. Participation rates stayed the same. So that's why we saw the unemployment jump from 3.7 to 3.9. So basically they started counting 150,000 people that are unemployed that weren't counted in the last report, whether they hadn't applied for a job recently or something like that. So that's why we saw, unemployment jump up. If we see a 4 in front of that, then maybe we see the Fed start, thinking about the second part of their, keeping unemployment rate low. Another really interesting part of this job, like we've been looking at, this report showed 187,000 full-time jobs lost. Now over the last 3 months, that's 1.78 million full-time jobs lost. That is not a good number for America. Other part-times increased by 51,000 jobs last 3 months, 909,000 more part-time jobs. So net jobs lost last 3 months is 898,000. So again, that is not painting the rosy picture that the business survey is showing, which 275,000 jobs created. So again, the markets digested this, not didn't go great for us, but it wasn't as bad as could be because we saw the unemployment jump. If that hadn't happened, plus beating estimates, that'd been pretty bad. But again, the BLS jobs report, more BS than anything, if you ask me. Next thing we got was earlier this week, we got February CPI, so inflation. And headline and core both came in hotter than expected, which, again, we don't like because hotter than inflation is, the more the Fed is, more likely to keep the rates where they're at. So headline came in at a 0.44 gain month over month, core 0.36. Headline jumped from 3.1 to 3.2%. Core came down a little bit, 3.9 to 3.8, but we were expected to go down a little bit lower. Those were all a little bit higher than expected. And again, the main culprit here is shelter. We've talked about this before. Shelter is not in these reports is not matching up what it is in real time, it is coming down from 6% down to 5.7, but still a much higher percentage than we're seeing in all the other metrics, whether it's apartment list, core logic, things like that. The other culprits this month were apparel jumped up 0.6%, education and communications 0.5, airline fares a big jump, and then motor vehicle insurance continues to go really, really high. Seen a lot of articles, just across the internet on this kind of stuff, across the country with, vehicle insurance going up. And again, this is something that is part of core, but the reason motor vehicle insurance is going up is because more accidents, more break-ins, more natural disasters, and the Fed making rate hikes or cutting their rates has no effect on that. So, probably shouldn't be included in core. But it is, and it's negatively affecting us. So that's not good. Next one we got was February PPI. That came out this morning, way hotter than expected. This was not a good one. Came in at 0. It was expected to be a 0.3% gain month over month. Came in at 0.6% month over month. Now up in the core came in a little bit hotter than expected, but about 0.4 or 0.3, I believe. And then year over year, the headline number is up to 1.6%. It was at 1.1% previously. So, a pretty big jump. It's still a really low number, but, as far as, they annualize this stuff. So this month over month is going to go into this year over year number for the next 12 months. So that's a big jump compared to where it was at. So still overall low. And the big culprit here was energy prices going up about 4.4%, which we've all seen with gas prices going up. Next thing, initial job claims, 209,000 new claims. Estimate was 218,000. Another weird one, BLS again involved here. There's a negative revision to the continuing claims. So this one, is about 1.9. They were reporting. They negatively revised last week's number by 112,000 continuing claims, which is a big difference. So again, they're doing weird seasonal adjustments, making weird changes to the math. Makes it hard to trust these job reports that are coming from the BLS. Miscellaneous stuff. So we got retail sales and credit card delinquencies. So retail sales came in a little bit lower than expected. I think 0.6% for the month. It was expected to be 0.8% up. January was negative. Remember last month, 0.8% negative. It was actually revised a little lower, negative 1.1%. So it looks like maybe the consumer is slowing down, which is good. That's good for inflation. And then credit card delinquencies came in at 3.1% last month, which is the highest since 2011. So again, take those, if you combine those two things, retail sales down, credit card delinquencies up, maybe the consumer is slowing down. Maybe we've all run out of credit and are going to stop spending money. Average 30-year conventional was up from 6.95 last week to 7.02. Again, the BLS jobs report didn't really do it, but these inflation reports are the ones that did it. And then important dates coming up. Next Wednesday, we got the Fed meeting. Again, they're going to keep it where it's at. They're not going to cut, but we're going to have to keep a close eye on the comments afterwards in their press release. Then we got PCE, another BLS jobs report, another CPI. I think we'll get another PCE before the Fed meeting, I believe, May 1st. So that's, hopefully some of this data starts coming in our favor as far as inflation, jobs, but really jobs, unemployment rate going up, job numbers coming down. That's going to be probably where the Fed, stops paying attention all about inflation and starts saying, hey, we got to protect the job market because that's their second mandate, like we talked about. So, if anybody needs anything at all, please don't hesitate to reach out. Otherwise, I hope you all have a great week and enjoy the sun out there. Thanks.